Hey, good afternoon, everyone, and thanks for coming out. Um, just for quick reference, we're at rightlinetrading.com, and our email address is info@rightlinetrading, and our phone number 786-713-5276. And the mandatory disclaimer is that the information here is for educational and demonstration purposes only. And Right Line Trading takes no responsibility for any profits or losses that may be incurred while trading. Careful consideration of your financial position should be made. Never risk more than 2% of your account on any trade, and we're not a certified licensed commodity trading advisors. So with that said, just a little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia. I've published close to 15 peer-reviewed articles in first-tier journals and top-tier journals, and I've been involved in the financial markets really for over 20 years. Now, Right Line Trading software is the product of over a decade of analysis of price action, market structure, and indicator algorithms. And our software is very unique and different from any that you've probably seen in the past. The software is based on mathematical modeling of closed systems, utilizing multivariable equations. That's what I did as an undergraduate. I did mathematical modeling for the U.S. Navy, optimizing deep dives, underwater decompression schedules. The same mathematical modeling and application also applies directly to the financial markets. And our software is one of the fastest growing trading systems on NinjaTrader. Now, what I'm going to show you today is our Forex trading system. And again, as I mentioned, it's really different than any other trading system that you've seen before. The Forex presents great opportunities for profit, but unique challenges. In that it has a bid-ask spread, and that makes trading a little bit more difficult. And to get precision exact software generated entries is just a little bit more difficult as well. Our software is used by many funded top step traders. And I just want to mention real quick about these Forex engines and optimized auto traders for Forex. We have auto traders for futures, and the problem with generating an auto trader for Forex is that you can either optimize for the bid or optimize for the ask, but you cannot optimize for the price because you can never get the price. And optimizing for the ask on a buy is fine. Optimizing for the bid on a sell is fine, but an auto trader can either optimize for one or the other. Can't alternate between a bid-ask optimization process. So I have found it impossible mathematically to generate an auto trade system for the Forex markets because of that bid-ask spread. On the stock market, it's not a problem because you're only dealing on a heavily traded stock, you're only dealing with a cent. But when you're dealing with a pip or two, or even 2 or 3 pips, it makes an enormous difference in performance. Now, our system was created via the use of mathematical modeling techniques, as I mentioned. And mathematical modeling is really the science that used to generate the type of software that's used by Google, Facebook, almost all big tech companies. And our software, you're going to see our indicators lead price. They don't lag price. And really what they are created to do is to predict the future movement of price in any financial market on any time frame. And if a software system is real, and the forces it defines that govern price movement out into the future are real, it doesn't make any difference the time frame or the market you're trading. These are either true independent forces operational on every market and on every time frame, or they don't work on any markets and on any time frame. If you ever see a system that only works on a 450 NASDAQ tick, or or a 500 tick Forex market, it just doesn't work. Now, our system does work on futures, Forex, and stocks. But I'm going to be showing you today is the Forex markets. All the indicators have forward-looking ability, and you're going to see that not only on the JPEGs I show, but also when I project the live markets. I have a platform open right behind the slides, and it's always all well and good to show JPEGs. Everyone can show great trades, but it's a different. I have 10 Forex pairs open, and we're going to look at the entry signals on those pairs. And again, the software is purposed to predict the future movement of price on any Forex pair. Now, for a long time, I traded range bars. And the reason I like range bars is I like to trade a bar that only has one independent variable responsible for when a new bar is created. And with range bars and Unorenko bars, it's only movement in price. It's not time dependent, and it's not tick dependent. So if you trade a time candle, it can move an enormous amount in any given unit of time. If you trade a tick chart, it can also move in an enormous amount. But range bars and Unorenko bars are totally dependent on one independent variable again, and that is how far the candle moves, and not time dependent or tick dependent. Now, I traded range bars for a long time, and it really does define price action really well, and I'll show you that in a minute. But I really became a Unorenko convert. Now, if you look at this chart, you can see how choppy price action is. You can see it's definitely in a downtrend, this market, but it's a choppy move down. And if you use, this is the same time frame defined on a Unorenko chart, you can see how smoothly it's defined. And you would only take a short trade because the trend is down, and I'll show you how we define it. And you're looking at every long retracement and a rollover to the short side, long and roll over to the short side, long and roll over. But you can see how smooth price action is, or price and trend. And so I've really become a Unorenko convert, and I've really totally abandoned my range bars. Now, the Unorenko bars definitely have weaknesses, and they have to be overcome by really powerful leading indicators, or you can get really blitzed out in a choppy market. So far this week, we have 10 trades and 10 winners, and we're up close to $1,500, just trading a small amount of money in the live trading room, because we are able to, using our indicators, sidestep all the losers and all the chop. Now, the weaknesses of Unorenko is that they do obliterate price action, and they don't tell you from candle to candle who's in control of the market, the bulls or the bears. And you can't evaluate Japanese candlestick patterns. And even in today's market, where a lot of it is, a lot of price is algorithmically created by big institutions via the use of computer-generated moves, still being able to read an engulfing candle, a dark cloud cover, a piercing candle, a doji, these patterns are definitely helpful. You can't discern between a rising and falling triangle, bull flag or bear flag, and you also can't see channels very well. That's the negative. And so in order to overcome those negatives, again, you really have to trade something that has very powerful leading indicator to signal an entry that's going to prevent you from taking a trade in a market that's only going to go one more candle and then come back and stop you out. And the strengths is really what you saw. They filter out an enormous amount of noise. And along with these kind of powerful leading indicators, you really do get superior trading opportunities. And the other thing about Unorenko bars is that each market, based upon its average true range or volatility, has to have optimized Unorenko inputs. Like one Unorenko input one Unorenko size doesn't fit all. And what we've done is we've optimized the Unorenko inputs for each individual Forex market. So let me just skip this real quickly and let me go to the core of the system. Now, the core of the system is the 3-line indicator, and it's the V2 stands for version 2. Now, really the key element of our trading system is that we don't look to analyze any of these variables on our trading chart. What we do is we look at the 2 higher Unorenko timeframes or settings. Now, the first line does a multi-time frame assessment of momentum. The second line does a multi-time frame assessment of stochastic, and the third a multi-time frame assessment of order flow. And I'm going to show you in detail how we do the calculation for these 3 individual forces that come to bear on price and determine how price is going to move out into the future. Now, the first one is order flow. Now, order flow on the Forex markets is tricky because you can't tell when a Forex trade is executed. All you can look at is market depth. How many buyers are on the bid and how many buyers are on the ask. That's all we look at with market delta. We look at market depth. And I'll show you the weaknesses and how we overcome those weaknesses. Now here, it's a little blurry, and I apologize for that, but you can see the numbers 29.85 for this candle. And this is an up candle with a positive delta. And this tells you that there's a lot more buyers sitting on the dome than there are sellers. So one would suppose that there's a lot of buying pressure on the market and that the candle is going to close up. Here, you still have a positive delta. The delta is 222. There's still greater depth on the buying side of the dome, but the candle closes down. So if the delta doesn't absolutely predict the direction of the candle close, how do we leverage it to determine whether there's a lot of buying pressure in the market or a lot of selling pressure in the market? So what we've done is this. A lot of platforms look at market delta, but I think if you don't leverage it this way, it can really be misleading. And here's how, well, first, I just put this slide up just to kind of emphasize the point. This is obviously an up candle. It's got a lower wick or a lower shadow, but you can't tell whether the candle delta is positive or negative just based on the direction of the close. You could, I mean, market delta would be not only an outstanding indicator, it would basically give you every trade. So this is not a Unorenko chart, but it still exemplifies the point that I want to make. And that is 66 2/3% of the time are 1 standard deviation's worth of data. The market delta will close in the direction of the candle close. So on a bell-shaped curve where all the data is normalized, on average, or within 1 standard deviation's worth of data, the market delta will close in the right direction of the candle close. So what you have to decide is how do you get rid of the outliers. Now, here is a graph simply of the absolute value of the market delta. And if you try to use that to predict how price is going to move out into the future, you're going to find all it's going to do is mislead you and walk you into lots of losses. It has no future predictive value. Now, if I asked you, what is the goal of a trader, whether you're a day trader, a swing trader, irrespective of whether you're trading the futures market, the Forex market, or the stock market, a lot of you, probably most of you would say it's to get winning trades. And when we send out these little polls, that's what we get. But that is not really the correct answer. The correct answer is not to get winning trades. It's to avoid taking losing trades. And if you approach your trading with that mindset, it creates a whole different sort of methodology. Every day trader and swing trader never has problems getting winners. What they have problems doing is avoiding the losers. Like again, this week I have 10 trades and 10 winners. I've been able to avoid every single potential loser. And the way you do that is to trade with a tremendous amount of specificity. If the trade has any potential risk, you let it go. And if it evolves into a winner, you don't care about it. Because what you want is when you do take a trade, it becomes a winner. So you have to trade with a lot of specificity, not sensitivity. So what we do, that was kind of a little bit on the side, but our goal is to avoid losers, not to get winners. We're always going to get winners. What drag us down are the trades that we get pulled into that don't work. So what we do is we look at the delta of each candle on the two higher multiple Unorenko charts. We totally ignore the delta of the candles on our trading chart. And what we're doing is we're looking at the two higher, essentially Unorenko timeframes. Each individual Forex market has there's really two. I'm going to show you the settings. I'm not going to hide them from you. They're basically two Unorenko settings for markets with a lot of volume and a lot of volatility, and for other Forex markets with low volume and low volatility. But the indicator is going to take the 2-time and 3-time multiple Unorenko settings and only look at the delta of the candles on those two higher time frames. Now, what we want to do is we want to discard 1/3 of the data, and that's the data that doesn't fall within that bell-shaped curve. So the way that we do it is we put the delta into a 15-period moving average and create two moving averages based off the absolute delta value of the two higher time frames. Now, when both 15-period SMAs are sloping up, the bulls are firmly in control because we have essentially eliminated almost all of the outlying data, or made that outlying data almost irrelevant. Because when you have a smooth 15 period and do a 15 candle look back, at least 10 of the 15 candles have the delta close in the appropriate direction, and they're going to push this line into the appropriate slope. And when both 15-period SMAs are sloping down, the bears are firmly in control. You've got a significantly greater number of buyers or sellers in depth on the dome than you have buyers. And when both 15-period SMAs are not in agreement, then the 3-line indicator, or the last line, the one that shows order flow, is going to be yellow. And on a yellow line, you just don't trade. So this is going to give you a tremendous advantage in taking winning trades. And let's take a look. This is taken right off of the Forex markets. And somebody keeps texting me which always happens when I'm giving a webinar. But you can see the order flow line turns green before price turns up. And it gives you an absolute direction to trade. If you try to counter trend trade the opposite direction of order flow, the chances of you getting stopped out are exceedingly high. And our goal here is to take low risk entries. Now, your automated trade management strategy, i.e., what your stop and your targets are, we have recommendations for you. And you're going to lose the trade on a down candle, but you can re-enter on the up candle and continue up. You get the pullback, you re-enter on a long candle. The one thing you're going to never do is counter trend trade order flow. Now, I'm going to give you another example. Order flow here is all green. The two 15-period SMAs on the two higher Unirenko timeframes are telling you that there's an overabundance of buyers on the dome versus sellers, which is leading to buying pressure, and price on your trading chart is going to rise. And what makes this indicator, and all three indicators, components of the three lines so powerful, is that this is not looking at price on your trading chart. This is green, not because price is rising. Price is rising because this is green. And this assessment is done off the higher Unirenko timeframes, and it totally ignores price action from your trading chart. In my opinion, any indicator that is based on price movement on your trading chart has no ability to predict how price is going to move out into the future. I see people tout them all the time. Divergence signals, oscillator divergence, MACD divergence, MACD crossovers, nothing based on price on your trading chart is going to tell you where price is going to move out into the future. It's your two higher time frames and the assessment that they do. Here's again another example. Again, it leads price. It turns green before price heads up. And in here is chop. And now you're just can just trade short, and you can just trade long. Gives you, we haven't talked at all about an entry. All we've talked about is an absolute direction you have to trade to minimize risk and optimize potential reward. Here, it's going to change color back and forth. Now, with one line and one metric being assessed, it's still a little tougher to define chop. But we're going to see when we layer this, we layer order flow with stochastic and momentum, it's going to make it very easy to define chop. Here, only long. So momentum utilizes the slope of the MACD. And we've done a number of different momentum assessments. We've used Heikin-Ashi momentum, and we've even used oscillator momentum. And the best momentum assessment that we can determine based on math is that of the MACD. And what we look at is whether on the two higher Unirenko charts, if the slope of the MACD line is accelerating away from the signal line, then on both higher Unirenko timeframe charts, then momentum is going to be positive. If the MACD line is accelerating towards the signal line on the two higher Unirenko timeframe charts, then momentum is going to be to the downside. If these two lines don't correspond, one is accelerating towards the signal line, the other is accelerating away from the signal line, you're going to get a yellow 3 line on the MACD. Now the MACD is the first line. And again, it's the same thing. We look at the slope of momentum on the two higher multiple Unirenko charts. When both momentum lines are accelerating away from the signal line, it's green. When both momentum lines are accelerating towards the signal line, that should be line, I'm sorry, I have a little typo there, it's red. And when the momentum lines are not in agreement, it's yellow. So now let's combine order flow and momentum. Now we know these are equal, excuse me, equal independent forces that determine the future movement of price. They have to be aligned in the same direction to take a low risk, high reward trade. And here's what you need. And it's easier to define chop. Right here, both lines go red, red, and they're going to roll price to the downside. Both lines turn green, green, and they're going to roll price to the upside. The top line is momentum, and the bottom line is order flow. Trade against these lines, and you're going to have a big problem. In the live trading room, I never do it. And once in a blue moon, when I do try to do it, I almost always get stopped out. Don't ask me why I try, but I've got such other compelling reasons. I will occasionally try, and everybody in the room screams at me. You have 125 people in the room, and they all yell in unison. It's kind of like a primal scream, but they don't take the trade. That's what's great about being in a live trading room. You can trade over my shoulder, and if you don't like the entry, you just don't take it. Here's another example. Now it's easy to define chop. You get very little alignment here. And remember, you can only trade each pivot, and I haven't given you the entries. But when you get red, red, you can only trade short. When you get green, green, you can only trade long. Red, red, short, green, green, long. And it's no accident that both green, green lines push price up. Because momentum and order flow on the two higher Unorenko charts, here we're being told that momentum or the MACD line is accelerating away from the signal line on the two higher Unorenko timeframe charts. And here we know there's an overabundance of buyers on the dome, on the market delta moving averages of the two higher Unorenko timeframes. And that's going to determine where price is going to move out into the future. It's governed by parameters off the higher time frame charts. You can do this on your own, but it's very difficult if you want to trade multiple Forex pairs to have three markets up of each market with a crosshair looking at all of these assessments independently. Here's another example. You can see how when they align, they keep you in the trade. You don't usually get a trade this long, but sometime now and then you will. And here's an easy way to define chop. The move down, no long trade, and just the roll to the downside. Now, I don't really care if you look at this move. It doesn't make any difference to me whether I showed you a trade that went 9 pips or 11 pips or even 7 pips. All you want to do is get into a low risk, potential high reward trade. And whatever your first target is, and we recommend it's 5 pips, we have 3 targets. And as long as you can get to your first target, lock in profit, the rest is gravy. So I can show you a 75 pip trade and a 100 pip trade. But you know what? It doesn't matter. All you want to do is get into a low risk, high reward, and ultimately have it evolve into a winner. Now, the stochastic line is a little more complex. And this is the one where if you try to do on your own, you need to have a mental computer because the stochastic assessment is a little bit difficult to do. And what we do is I'm just going to go right to our assessment. When the stochastic line is over 80 or overbought, the stochastic line is always going to stay green because the bulls are firmly in control of the market. We don't trade oscillator divergence. Divergence is one of the worst signals imaginable to try to trade. When you have a signal that works sometimes and doesn't work other times, it's useless because you don't want to be walked into losers. So when the line is overbought, the bulls are firmly in control and the line's always green. When both stochastic lines are below 20, the bears are firmly in control and the line's always red. Now, when stochastic is between 20 and 80, it depends upon the stochastic line with respect to the signal line. When both stochastic lines are above the signal line, then the stochastic assessment is green. When both stochastic lines are below the signal line, then both lines are red. And when the stochastic lines are not in agreement, the line is going to be yellow. Now, our indicator does assess stochastic divergence, and eventually we're going to bang it out. Because what it does is it looks at stochastic divergence on the higher time frames, and when it materializes, you lose the three-line color. But it gets overrun almost every time, and it's more confounding than anything else. So now we have to have all three lines red or all three lines green on an entry to take a trade. We have to have momentum line 1, stochastic line 2, order flow line 3, all aligning to the upside or downside, no yellow, either green or red in the direction of our trade. Now, to make it easier, what we do is this. When all three lines are assessing momentum, stochastic, and order flow. So if you're trading multiple Forex pairs, we want to make it as easy as possible for you to know when that's aligned. So what we do is we project the results of the three line directly onto the candles, making the assessment really easy to determine. You can pick the color you want, and you can pick the thickness you want. But you can see here what I've chosen is when the order flow, stochastic, and momentum are aligned to the upside, the candle's outlined in blue. So I don't even have to look at the three line anymore. All I have to do is look at the candle halo. And when the candle, when the three line is aligned to the downside, I choose to outline it in gold. So I know without looking at the three line that I'm heading down. And when they're not aligned, you get the default outline, which is black. You can change that default outline, but those are all three of these colored outlines can be changed to the color that you like and the thickness that you like. So the three line assessment is all projected onto your candles so that you can pay close attention to what really matters. And if you want to trade multiple Forex pairs, you don't have to be sitting with your crosshair looking at the three line, making sure that all three lines overlap. Now, we make it even simpler. Now, I just wanted to show you a couple of examples. Here's where the three line turns down on an up candle and then price rolls. Here's your entry. And price turns down on the three line first. Here's your pullback. In a short trade, you look for the down and price rolls to the downside, you're short. The same thing happens here. You get an up candle on a down three line. You can't take the trade long. You're just looking for the roll back to the downside and the trade down. So this is how the three line leads price and will absolutely prevent you from taking a long trade when the three line is aligned to the downside. Because this long trade here has no life. It's really likely to just turn back down. You can see the three line change color real briefly, but we're looking for the roll to the downside. Now, we make it even easier because if you don't use the three line and the data that it assimilates is projected onto the candle, you don't even need the three line. Now, on the templates I'm going to show you on the Forex markets, I left the three line in just so you can see it. A lot of traders choose to leave it in, And I don't know why they do, but what we do is we turn it to transparent. So the only thing that we see is the candle outline. And I don't even have to bother looking at the 3 line unless I choose to. So here's what the chart looks like. There's your entry. There's your move up. There's a pullback you can't take. It's a long trend. And you just look for the long entry with the 3 line to the upside. Here's your short trade right here. Here's another one. This one gives you a long entry. Now, I haven't really shown you entries, and I'm going to show those to you in a minute. What I want to show you here is you do have a short trade, you do have a long trade. There's no entry here because you see the 3 line? You don't have it. It's got a black candle body. This long trade, you don't have any trade. You have a black candle body. When you trade with specificity, you're going to lose a couple of small winners. When you take the trade, though, in the direction of the 3 line is when you're going to get these big moves. When you trade with specificity, you're going to lose some winners. But what you do is you filter out the losers. Again, our goal is not to grab all the winners. It's to filter out almost all the losers. And then we have an exponential oscillator that it's not absolutely required in an entry, but a signal is very, very advantageous. And here's our entry signal. Now here's the 3 line. And you can see on this entry, you have a 3 line. Here you lose it, but you only want the entry. Once you get the 3 line entry, you're in 1 tick above the close of the candle and you're in off of the ride. Here's the oscillator signal and you're up. Here's the oscillator signal and you're up. Here's the oscillator signal and you're up. And all you have to do is look at the candle halo. This is green, green, green. Now I'm going to show you something that I don't want to confuse you, but I want to tell you how the exponential oscillator works. And then I'm going to give you one other parameter of momentum that will make the assessment a little bit more difficult and why it's best to just look at the candle body halo. Every time that the oscillator crosses the 50 line to the upside, you get an up. Every time it crosses the 50 to the upside, you get an up. You get an up. You get an up. When you're above the 50, you can only trade long. That's why this down signal, you can take it if you had the 3 line, but the counter trend trades are much riskier. And if you're in the live trading room, and you will be, if you come aboard, you'll see that I very rarely take a counter trend trade. I have 10 winners this week, 9 trend trades, and 1 counter trend trade. Counter trend trades are definitely riskier. Now, the assessment of momentum is a little bit more complicated than I first told you. You can get a 3 line assessment if the momentum line is yellow, simply because of this fact. And this is why it's better to use the candle body color than to use the 3 line. On the 3 line assessment of momentum, we're simply looking for the MACD line to be accelerating away from the signal line. But we wanted to create a dual signal. And it's turned out to be of no value, but we just simply haven't coded it out. Now, in this period of yellow here, the MACD line is accelerating away from the signal line, but the MACD line hasn't crossed the signal line yet. And I'm sure you're all aware of that, they call it the MACD cross. So this momentum line is only going to color green on a MACD crossover. What it's going to do is its internal assessment and projection of momentum on the slope of the MACD with respect to the signal line. So I hope that's not too confusing, but occasionally you're going to get an up candle halo when that first line is yellow, simply because the MACD hasn't crossed the signal line yet, but this assessment on the candle halo is only based on the slope. And you see right here, you get an up, you get the cross of the 50 to the upside, and the 3 line is giving you an up. It's circling the candle in blue. Even though this is yellow, the MACD line is accelerating away from the signal line. It just hasn't crossed the signal line yet. That's all. Or it hasn't crossed the 0 line yet. I'm sorry. So this is the best way to make the assessment. I hope I haven't confused you. And here's the trade to the downside. Now these are real, these are real slides, real trades. I'm going to show you the live charts. Here's an entry to the downside, oscillator down, oscillator down, oscillator down, oscillator down. And you see when our 50s, is just a 50 simple SMA. When price is below the 50, we're looking for the roll to the downside, pull back into the 50 and roll, pull back into the 50 and roll with 3 line okay and oscillator entry. And they're very, very precise. And I just wanted to show you the oscillator here in a little more depth. You can see that every time the 50 line or the oscillator line crosses the 50 to the upside, you get an up. When the oscillator crosses the 50 to the down, you get a down. Now, I wanted to remove these because these are telling you that the market's oversold, and this is when the oscillator line is below 20. I don't like them. I don't use them. But everybody in the trading room yelled at me, so I left them in. They want to see them, it's fine with me. But I don't use them. I look for the down red, not the up red. The up red is telling me it's oversold. It doesn't make any difference to me. Here's the 50, cross to the upside, we get an up oscillator signal. Down oscillator signal on this cross. Now, before I go to the offer, and I think we're making a great offer. Let me show you the slides. And everybody can show you slide. Everybody can show you JPEGs. So so what? This is a live market. Now I'm going to tell you another thing that makes it even more difficult when you do the assessment, and that is, and we're working with NinjaTrader on this, but this is a fractal indicator. It does an assessment, it does a multi-time frame assessment. And every time you close your chart and reopen it, it's going to change the color of the halo simply because, and again, I don't want to confuse traders. When you're trading live, what the NinjaTrader platform is doing is looking at the candle previous to the forming candle, which is correct. When you close and open, and this is a flaw in the platform, it then compares this candle to the future candle. Now in live, future candle hasn't occurred yet. So it does the look back to the previous. So it pushes everything to the right. So you don't get an adequate, if you want to keep it true, you can't ever close the platform. Which is a little bit of a problem when you do a retrospective analysis. A lot of traders have asked us how we can fix it. And we actually have the indicator into NinjaTrader right now. And they're telling us it's a flaw in their coding, in their platform. So we can't do anything about it. But if you look at the 3 line assessment, this was a short trade. Like this was surrounded in yellow on the live chart. And this would have been a huge winner. On a closed and reopened chart, you don't have it. Now we don't take a counter trend trade. And you can see on this roll right here, back to the downside, you've got the 3 line. And you've got this really nice move to the downside. Now this is blue, so I can't really give I don't have a great idea if that would have been yellow in real time. So we're just going to skip that trade. We've got this entry here, and most likely this entry here. Now right here is our perfect long trade. Now this is a 2 Unirenko. This is a less volatile instrument, and we have another winner here. That's a nice move up, and this is the Aussie dollar long. Now we have no short trade here into the 50, and here's your short trade right here. So this is just live off the platform. I'm not showing you, the best of the best. I'm showing you what happened live. Now, normally we don't include the pivot indicator, but you're going to see for the first 10 orders, we're going to include the pivot indicator. And we have a very unique pivot indicator. The pivot indicator, now there's a lot of debate whether pivots should be created off of the price or off of the candle body. And I'm convinced that a pivot should be created off of the candle body. Ours create pivots off of the candle body, and they automatically break when 2/3 of the candle closes below the pivot, breaking support, or above the pivot, breaking resistance. And we've had a ton of people asked to buy our pivot indicator, but we will not split it off of the platform, but we'll give it to you as part of the order. This candle does not break 2/3 of the candle, 2/3 of this candle body still above. So the pivot continues to trace. And you can see how important it is because it keeps turning price. It turns price here, it turns price here, it turns price here, and then it finally gets broken. And you all know that every time a pivot is hit, it gets weakened. So it's hit once, it's hit twice, it's hit 3 times. Finally, on the 4th hit, it gives way. But you can see how dangerous it is trading into a pivot. You're going to have to take 3 losers in order to get this break. So you have to be very, very careful trading into a pivot. Here's another winner right here. Here's another winner right here. And I don't know what happened to this candle. This is, I just don't know what happened. I can't tell you what happened on this trade. It's actually a winning trade, and I don't know what happened here. Now, our candles are also unique in this way. A Unirenko can give you what's called a ghost candle. It can create a candle body where there's actually no volume. Ours will not do that. So this is probably an area where there was no volume. Now, this was an entry short. You have the 3 line and the oscillator signal, but you had no volume here. Other systems would have given you a full Unirenko bar. Ours didn't, so you don't have a trade. So you have like 5 or 6 in a row. 1, 2, 3, 4, 5, 6 trades, winners in a row. And we can go to another pair. And in a minute, after I show you the order, the offer, I can go to any Forex pair that you like. We can look at the, I don't know, look at the pound yen. Now here's the pound yen. Now this is also on a 2 Unirenko. And look at the short trade right here. Now, you can't trade into the 50 here. You have no trade here. Here's your short trade. Now, based on your automated trade management strategy, that's going to determine how much of this move you're going to get. Now, in all likelihood, you're going to get this much of the move. Because on this up move here, I wouldn't have an ATM that allowed you to have 2 up close candles in a row to keep you in the trade. Now, in real time, I can't tell if this was a re-entry short because we don't have the 3 line. But you can see you don't absolutely need the oscillator. There's your continuation short trade. So you have a perfect trade here, maybe perfect trade here, I don't know. And here's your absolute perfect trade continuation short. Now this is not a trade. You don't have 2/3 of the candle closing below, but here's your long trade right here. 2/3 of the candle closes above the 50. You've got yourself a long trade and a winner. You can't take the short trade because the 3 line is absolutely green. Remember what I said, how difficult it is to take a trade in the opposite direction of the 3 line? Here's a great example of a down candle on 3 green lines. And trust me, this candle's going nowhere but north. Now, you can't, in all earnest, you can't, if you take this, it's a high risk trade. You haven't broken the 50. And I don't want to show you any entries that aren't really a perfect entry. This is a nice signal. And your anticipation is a short because the 50 is really pretty much to the downside. But you're just not going to take that trade. Now here you have no 3 line. So you have no trade. Here you have no 3 line and no trade. Here again, you have almost a great short trade, but you have not broken the 50. So you just have no trade. And here you have no long trade. Now here is a long trade on a falling 50. It's a little bit riskier, but it's a winner. And you'll notice here too, you don't have an oscillator signal. So this is a riskier trade, but it's a first target. And here are your nice trades. This is an absolute winner. And this one, it depends on your first target. And this is the shortest trade we've seen so far. This is 1, 3, 4, 5. This is 6 pips. I don't know if you would have had a winner on that trade. Now here's your short. Now we're trading at 21, 36 hours. Not great. Look at that winner. Look at that winner. Look at that winner. I mean, it's winner after winner after winner. This is what you want. You want low risk, high reward trading entries. And I can show you these all day. And I'll show you another Forex pair right here. When you get the oscillator in the 3 line, when the 50's heading down like this, and this is really reflecting a multi-time frame assessment of momentum. You know here, based on another indicator, you want a short trade. You're below the 50. You're just going to roll, oscillator, 3 line, down you go. And here, look at this colossal trade here, right here. I mean, if you're not done for the day after this move, remember, if this long candle takes you out, you go right back in, and down you go. And let's look at another pair. Now, I haven't been able to show you a loser yet. And I'm sure I can find you one if I look hard enough. Now, here is the dollar yen. Now, I don't know if this was a long trade. I don't have the 3 line now. I may have had it in real time. So let's for our sense of argument here, we'll say forget about it. And it doesn't look to me like we have it here. That middle line here, which is stochastic, is absolutely red. No 3 line here. And there's your ghost candle, which in most systems would give you a full Unorenko candle, but ours doesn't fake you out. There's no volume here. So you don't get any volume. And here's your absolute perfect bread and butter long trade. Right off the 50, just right off support. If you wait for these trades, I'm telling you, you are going to be in the driver's seat. And this is a 4 Unorenko. So this is a 43 pip trade. And there's no way you're going to get taken out because there's no wick at the bottom of this candle. Now, you're not going to get the top of the trade because you're going to be on a trailer. But the trade from entry to maximum excursion is 43 pips. Now, this, I believe, would have been a long trade because everything is pushed to the right. And this would have been another 40+ pip trade. Now, this is not a short trade because that middle line is solid green. Here's your short trade right here. And it's another winner. Now, I haven't been able to honestly show you a loser because I haven't found one. And look at this long trade right here. Killer trade. Entry, and up you go. So let me just move over to the offer. I mean, I really, now this is a 4 Unorenko. So these are huge moves. This is about maximum excursion, 46 pip trade. Doesn't mean you're not going to get all 46. You're not going to close at the top. You're going to come back and lose some of that. I just want you to know how far the trade went, maximum excursion. So let me just put the offer up and go back to my slides if I can find them. Here they are. Now, if you like to trade, now the same system works on futures and it works on stocks. But what I showed you was the system formatted for Forex. And let me just reverse this here, and let me go down to the offer. Now, the Unorenko Trend 3, which is order flow, stochastic, and momentum, it's normally $14.99, and that's a lifetime license. And with that, you get free upgrades and you get add-ons. We make a better indicator, and we do a lot. We do a lot of upgrades. You get them for free. It's $599 for a lifetime license. And it really does work on any market in any time frame. And like I said, if that wasn't true, then the forces that I'm talking about with you that move price into the future would not work. I mean, it does work on futures as well as you see here, and on stocks. Now, the first 10, there's a lot of traders in the room. There's about 175 people in the trading room. I mean, on the webinar. Now, the first 10 get a month with me in the training room, and you're really, really going to get a great feel for how to trade, because I trade this system every morning. And so far this whole week, we've traded a total of about 3 hours. It was my adage is you get 3 wins and you close, or you hit your profit target and you close. We got 3, 3, and 3, and one day we got 4 winners. And so, we've traded very, very little time. You also get a 10-module weekly educational training set that's $9.99 included. You get our video tutorial library, and we're going to give you the pivots indicator. And the pivots indicator is a really good indicator for looking at support and resistance. And most pivot indicators on Unorenko don't work because they're trading off the wick, and they're not trading off the candle body. They break on a 1-tick violation of the pivot. You have to have the pivot even indicator itself actually assesses what percentage of the candle has pierced it, and is only going to stop tracing when 2/3 of the candle breach it to the upside or to the downside. So let me see if there are any questions. Whoops, wrong one. Okay, let me just scroll to the top. Okay. Absolutely, Safir. If you want to, we'll give you settings for a day trade or a swing trade. We have everything optimized. So if you want to take trades that are going to evolve over 2 or 3 days, we'll give you the inputs. If you want to take the day trading inputs, we'll give you those. We have all of that optimized. And we have them optimized for each individual Forex pair based on their volatility. A very volatile instrument is going to require a different Unorenko setting. It's really critical to getting a winner. I mean, you don't want to trade a candle that moves so fast you can't grab an entry. Thank you, Craig. I appreciate that. Jory writes, some periodic training for those of us that have purchased so we stay current with what you're continually evolving. Sure, Jerry. We're going to do periodic educational stuff because we really are evolving fast here. No problem. Okay, what it is, Craig, and it's confusing, is that when you, just hang on one second. I'm a single dad here, and my son always sends me a text message during a webinar, and I just got to answer him. Okay, what happens is you've probably never seen a fractal indicator before, and a fractal indicator really does a multi-time frame assessment. Now, NinjaTrader platform doesn't know how to handle it. So when it's assessing the candle color live, it's looking at the evolving candle with the previous candle, which is what you want it to do. You want it to look at the value of momentum, stochastic, and order flow on the candle that's evolving with the previous candle. And the color that you get in real time is correct. But then when you close the platform and open it, because of the nature of the indicator, it then jumps from the candle that was forming to the future candle. And it moves the color of everything, shifts to the right. And we've been back and forth with NinjaTrader a million times. And they acknowledge that this is a flaw in the coding of their platform. So if you close and reopen, or if you refresh your chart, it's going to change the color, one bar, one candle, shift to the right. So if you want to do a daily assessment, just don't close your charts. Keep them open. There's nothing else you can do. Remember, you can always do market replay data, and that will help you out. But that's the nature of it. There's nothing to do with the indicator. It's simply a flaw in the NinjaTrader program. It can't handle a real fractal indicator. There's a lot of problems with it. All that matters, though, is live. You are getting the appropriate color, and it's giving you the appropriate information on whether or not to trade. When you do a look back, you kind of have to push that color off to the left, one candle. So if you see the 3 line is one candle more to the right, push it just one candle to the left, and you'll see pretty much almost always what you would really get. John, let's see, Ninja fractal flaw, even when a parameter is changed, the past bars, correct. They don't print correctly. I agreed. Let's see, Tesla box. I'm not sure what that is, Greg, but whatever it is, it means flaw. But we note it, and we know what's happening. So as long as we have an idea, it's a controlled flaw. It's just not a random flaw. It doesn't like scramble the colors. It just pushes them all one candle to the right. Yes, Paul, it's included. Remember, you can dial in any instrument here. Listen, the only thing that changes if you use this platform on futures or stocks are the inputs. The 3 forces that govern the future movement of price on the Forex are the same on the futures and same on stocks. If you want to trade this with futures, which is what I do every morning, I trade the E-mini and I trade crude, we'll give you the Unorenco inputs, and you're good to go on futures. If you want to trade stocks, tell us what stocks. Unfortunately, you can give us, as many stocks as you like, and we'll give you the Unorenco inputs, and you're good to go on stocks. This system is instrument independent and time frame independent. It does not really matter. I felt that most traders in this webinar would be interested in the Forex. So that's the market that I demonstrated. But you get the same entries on futures. And this week, everyone I have 125 people in the live trading room. They've seen me take 10 winners and no losers. And I drag over my super dome, my dome at the end of every trading. I show every trade. We use Chart Trader. My targets are up, my stops are up, my profit targets demonstrated on every trade. We're amazingly transparent. So everybody knows exactly how much money we made in the room or how much money we lost. No, Paul, I mean, it's just simply a matter of the Unirenko settings and you dialing in a different instrument. And I would show you quickly how it trades on futures and stocks. I just don't have that data feed connected and I don't have that workspace up. So it would take me a few minutes to close the Forex, disconnect the FXCM data feed, reconnect CQG and Kinetic, open up the futures, and then open up the stocks. All right, and let me tell you, the entries are indistinguishable. If I would have told you that those JPEGs were Forex, they trade exactly the same. They're identical. Mike, I can't, let me see if I can do that. You know what? I can't do that. I don't know if I can. Hang on a second. Hold on. Let me see what I can do for you, though. Hold on one second. Just hang on one sec, because that's a good. That's good, and I don't mind. Hang on. Hang on one second. Don't go anywhere. You know why I can't do it? It's reading me 00 because I have the FXCM data feed and my CQG and Kinetic data feed are disconnected. So it's not giving me any data because I trade futures and I would have to disconnect and change platforms, or I would show you the results. I mean, this week we're up about $1,400 in 3 days. I just can't do it because of the data feed and because of the market I chose. If you want to see, I'll be happy to show it to you. I just can't do it right this second. It is being recorded, Wayman. It does not work on MT4 Tamer. If you really want to use the signals, you can get a demo download of Ninja. We'll provide you with a live data feed, and you can take the signals right off of Ninja for no money. The data feed is free. We give it to you. The demo version of Ninja Trader works forever. And when you get an entry signal, just take it on MT4. You have a lot of traders who do that. So that's an option for you, and it costs you no money whatsoever to run Ninja Trader as long as you don't trade off of it. But the signals you get, because we give you a live real data feed, are identical to what you would get on the live platform. Yes, Greg, you do. Remember, you're gonna be in the room with me, and I trade futures. And after each session, I spend a lot of time in the room going over everything. I mean, I trade crude and I trade the E-mini, but I show the Dow, I show the NASDAQ. I mean, what also gives us great entries, I don't trade it, is the DAX. We get great DAX entries. We go over everything. I probably spend less time this week. We've made so much profit so quick. Spend more time, educating than I have been trading. So you're going to get a lot of backup. Yeah, Salvir, the truth is, Safir, is that the trading room is just futures. I don't want to mislead you, but the educational support you get and the intuitive information, your intuitive understanding of how the platform works is the same for Forex and stocks. So in the month that you spend in the room, you can stay in the room forever. That's the only recurring cost you'll get after that first month is over. You get the first month for free. We have a lot of people in the room, 125 people. You're really going to get a great feel for how to trade Forex and stocks, even though I don't trade them in the room. I used to trade Forex in the middle of the night for many months and then moved to futures. And then in the afternoon, I'd trade stocks. But I got so exhausted that I just was ready for a wheelchair and, like an intravenous infusion of saline. So I had to stop trading the futures, the Forex at 2 a.m. Eastern Standard. And I just couldn't trade stocks in the afternoon after 2 sessions. And it just became too much on me. I can't do it alone. iOS ready, Ariel? I'm not sure what iOS means. You have to just redefine that for me. I'm sorry. I've heard iOS. I just don't remember it right now. You know what, Cross? We want to go to Bloodhound very soon. The indicators are not Bloodhound compatible yet, but we have had so many emails of traders who want them enabled that we will be Bloodhound enabled soon. But we're not Bloodhound enabled now. We've had a lot of emails. I'd say, I mean, I don't know exactly, but you're one of many, many people who've asked us about Bloodhound. Well, Cross, remember, you can still trade eSignal. All you have to do is get a demo Ninja. We'll set it up for you. We'll configure it for you. We'll do everything for you. We will give you the live data feed, so you don't have to pay for it. And you just take your signals on it. You just trade it on eSignal. You can do that. And the other thing is, in all that time that you're watching NinjaTrader, you get used to it. You may like it, but it doesn't cost you a dime to do. That's the important thing. It makes it a little more complicated, but at least you get the entry signals. Absolutely, Ariel. You can use it on Mac. It'll work fine. We do, Dennis, but not in this package, and there's no cost, Dennis. Dennis owns the full platform, and he's asking about the Forex. Like I said, you get all upgrades and add-ons, Dennis. There's no charge. No, nothing repaints during a live section, Nick, ever. I mean, if you don't close your platform and reopen it, every oscillator entry and 3-line color and candle outline never repaint. I mean, that's scuzzy. Whatever you see, you're going to see at the end of the session. Nothing ever changes. Okay, from Ken. Ken writes, for those in the room, I have been using Right Line trading software for about 6 months, trading futures, and honestly, it is the best I have ever seen, and the first that is consistently profitable. I love the predictive characteristics of the indicators. The platform performs just as presented. Thank you again, Mark and the team, for a great product. And Ken, thank you so much for the comment. I really appreciate it a lot, Ken. Yes, Satvir. You know what? We will be enabled on NinjaTrader 8 in 1 week. So if you buy the system, we'll set you up on 7 and then roll you over to 8 in about a week. You only have to tolerate 7 for 1 week. So we're just about done with 8. So we're right there. Cross, let me tell you, I will send you JPEGs, but that's a ZB, trades terrific. And I love the 30-year bond. And let me tell you, I use the system to trade Tilt, which is the 20-year plus ITF Treasury. I use the options. I just took a Tilt trade and I made 88%. on that trade. And I have an options alert newsletter. I take the signals off of this system. I send out the alerts in my options alert, and we had bonds fly. I'll still send you the JPEGs, but it creates great signals. It's just a very unique Unorenco setting because bonds have very little volatility. So we speed the candle up, and I'll show it to you. Oh, this on Tesla. Let me tell you, Craig. I just have to remember. I'll show you a chart on Tesla. If I knew everyone wanted stocks, I would have put up a stock platform. And if I knew you wanted bonds, I would have shown. It's very difficult. And I'll just show you. It's either Forex or stocks and futures. And I disconnected the stocks and futures and opted for the Forex. But I can interchange stocks and futures easily. So if I would have known that had great interest, I would have put up the CQG kinetic feed, and we could have interchangeably moved from stocks and futures back and forth. But I'll show you a chart on Tesla. I don't trade Tesla, but you're going to get good signals on it. I use it. I trade Apple, and let me see what else I've got right now that I've been trading. They're all in my options portfolio, but I'll tell you what stocks I've been looking at and using. Let's hang on one sec here. Of the more popular, like Square, Box, Take-Two Interactive, Apple, First Solar. I've got a position in Huntington Ingalls. That's a defense contractor that makes boats. One of the best positions I have is iShare Saudi Arabia. It's killing it. And I take all these signals and these ETF entries off of this platform. And these are all swing trades. So it's a completely different configured candle setting. Listen, you know what, Craig? I'll show you the entries. I'll send you a chart on Tesla and Box. Okay? I happen to really like Box, and I got Box on a big pullback. And I like Square. And I'm in Box right now. Joe, you do not need additional data feed. We provide it for you. Mike, I can't show it to you because I have the wrong data feed, or I would show it to you. I would have to disconnect FXCM, connect CQG, and connect Kinetic. So I can't show that to you, but I will send it to you, and I'll take it to you right off the dome. Okay? We don't have it on MT4, Tony. Again, if you have a platform other than Ninja or Sierra, all you can do is we'll download a demo of Ninja for you, give you a live data feed, and you can take the entries on any platform you like. And to run the demo and with our live data feed, it'll cost you $0. It's a little clumsier, but it does work. Yes, Cross, you can. I'll have Rory review this and take care of you. Greg, the truth is, I don't think there's going to be a Forex trading room simply because on my own, I can't get up that early in the morning. The best trades are really about 4 o'clock in the morning to 6 or 7 in the morning. They're great trades in the afternoon, but I've got 125 committed traders to futures. And if I told them we're going to trade Forex, they'd come over to the office and they would shoot me. So I just can't do it. And I don't want to mislead you and tell you, in a week, in a month, you'll have a Forex room. We're not going to, simply because I can't handle it physically. I'll tell you though, I wish we did, because we can get great trades. I showed them to you. And believe me, I didn't hide anything. If there were losing trades there, you would have seen them, and there just weren't any. So I want to be as transparent as possible. That's why I'm leaving. That's why I'm showing you the system on a live chart. And I'm not trying to, be right here, entry, entry, maybe an entry, but probably not. Probably not. Now here's the first loser I've ever seen. Here's the first loser. Probably not an entry. So I really want to be upfront. I don't want to mislead you. No, it can run on Mac, Ed. I believe it can. I mean, I can talk to Sergio, but I'm 99.99% sure that NinjaTrader will download on a Mac and the system will run fine on a Mac. If you want to trade off of Ninja without a broker, we'll give you the data feed, Donovan. We're in tight with Ninja, so they've given us the ability to send out live data feeds. So we will give you the data feed at no cost. Cross, thank you. I appreciate that a lot. He said I rock, but I know it. You know, it's something I don't know it. Every time every night I go to bed, I try to make it better. Donovan, NinjaTrader 8, honest to God, in a week. What is it, Rory? Oh, actually, this system will run on NinjaTrader 8 right now. You can get our Unirenko 3-line V2 now on NinjaTrader 8. So it's ready. No, not a problem with NT8. I don't know, Ed. That's too technical for me, a question to run with parallels, to run windows. I'm pretty sure you can, but just send me an email and I'll forward it to Sergio. We do change settings for the day and swing trading. Okay, well, I'm pretty sure you can, Ed, but since I'm not positive, and that's a little bit too techy for me, I can just refer, if you send us an email, I will send it to Sergio, but I'm 99% sure. So listen, everyone, thank you so much. You're gonna get a copy of the video of this webinar. I hope to see you in the room tomorrow morning because we're gonna make money. Tony, Rory, did you put the link in the room? The link is in the chat box, and we're also going to be sending you an email shortly with the video and a link to purchase. You can also call us, and Rory will make the purchase. And you can make the purchase with Rory. If you get a busy signal, it's because we're actually getting calls now. I'll just tell you, I respect everybody's money. I'm a guy with a kid and a family. I just don't feel comfortable selling anything that I don't believe is absolutely going to work. I'm a shitty salesman. I'm a much better trader. Yes, Donovan, we do take PayPal. If you just send us an email, we'll send you our PayPal link. We don't like to take it, but if you want to use it, we'll be happy to take it. So listen, everybody, have a great evening. Listen, my mandate and my responsibility is to make you money in the live trading room. And if I don't do it every day, I go to bed with a bellyache. And I am dead serious. I mean, that's not what you're supposed to say as an advertiser, but I'm telling you that as a fellow trader. I really do. And you too, Safir. Thank you so much. I really appreciate that. All right, everybody, have a great evening, and hope to see everyone in the room. Thank you, Donovan. Thank you guys all. And we're going to go through this this chat and make sure that I fulfill my promises for all the JPEGs that I said I would send out. You're going to get them and everything. So have a great evening, and I hope to see you aboard. Take care, all, and best of luck, no matter what you do. We're the small guy. Let's beat the other small guys. We never beat the institutions. Let's rack up the other guys that are trading divergence, counter trend trading. They're always going to get run over. We should be the ones that run them over. Take care, all. Bye-bye.